Is the dollar yen set to move higher following tomorrow's NFP, or will it trigger another move lower from the pair? Hi everyone, my name is Justin Bennett with Daily Price Action, and in today's video we're going to take a look at the dollar yen, more specifically what it's going to take to trigger a move higher, especially with tomorrow's NFP just around the corner. So let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also be sure to check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I analyze currency pairs like the Euro USD, the Pound USD, the dollar yen, and many, many more, where I show you the key levels I'm watching and how I'm approaching that pair. So you're going to get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. Today's video on the dollar yen is going to focus on this trend line that extends from November 2018. So I've mentioned this one a couple times now, and you can see where this level triggered this last sell-off from the dollar yen. All right, but before we get too far, I do want to point something out. A few days ago, I mentioned that a daily close below 108.40 could trigger a move lower. All right, so notice how the pair has been moving higher, albeit a bit sideways, but we've had these higher lows and also higher highs. Now, recently, this right here was the first lower low, and furthermore, we got a daily close below this 108.40 key level. That meant that 108.40 should have become resistance and also attracted sellers. So why didn't it work out? And also, why didn't I short the pair at 108.40? And the reason for that is quite simple. I've talked about rounded retests in the past and their importance whenever you get a breakout. So in this case, a rounded retest would have looked like this. We would have had a close below this area and the pair may have moved a little bit lower and then gradually moved back up to retest this level. That would have created space between our key level and the price action. All right, but instead, what happened is we got an immediate retest of 108.40 and there was absolutely no space between the breakout and the retest. I've written about this on the blog, but any type of immediate retest like this tends to trigger a false break. And sure enough, a few days later, this candle right here made it very clear that this was indeed a false breakdown here. Now, furthermore, I've also written about the fact that false breaks to one side of a market tend to trigger extended moves in the opposite direction. Okay, so in this case, because we've had a false break of support, it means that we very well could see the dollar yen continue to push higher over the coming sessions. But this is where that 2018 trend line comes into play, because as of right now, the pair is still below that level on a daily closing basis. And even if today's session closes above it, we have NFP on Friday, and that's sure to trigger some volatility. Furthermore, the pair is also below this 109.70 horizontal level. That was the top back here in late 2019. Okay, so I think it's going to take a daily close above this 109.50 to 109.70 area in order to trigger a break higher. Okay, so we need a daily close up here before the next leg higher can materialize, perhaps up here into 111, maybe 111.10. You can see how 111.10 has been a key factor since 2018. Okay, but 111.10 was also this gap back here in May of last year. Now, this gap as of right now is unclosed. So notice how when the dollar yen opened the very next session, it opened down here, it rallied, but it never did quite close that gap at 111.10. And in my experience, a gap that remains open like this for that period of time tends to serve as support or resistance once the market reaches it. So in this case, 111.10 would be the next key resistance level if we do see this pair close the day above that 109.50 to 109.70 area. But just remember that non-farm payroll is tomorrow, Friday, at 8:30 a.m. Eastern. So that event is likely to trigger volatility for the pair. So it's best to stand aside and see if we do get a close above this area for next week. Alternatively, if we see bearish price action such as a pin bar or engulfing candlestick form in this region tomorrow, that could trigger a move lower for next week back here into 108.40. But ideally, given this recent false break of support, I would like to see the dollar yen close above this area and then continue higher next week. That's the ideal scenario for me, but it's all going to depend on what happens tomorrow with non-farm payroll. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.